Hello, I'm Teresa Clarke with Africa.com. We are here at the World Economic Forum in Cape Town, and today we have an opportunity to speak with Sola David-Borha, the Chief Executive, Africa's Region for Standard Bank. Hi, Sola, how are you?
Hi, Teresa. It's good to be with you.
Good to be with you as well. Thank you for taking the time to speak with us today. One of the big themes at WEF, as it has been for the last few WEFs, has been the fourth industrial revolution. Can you talk to us a little bit about what the fourth industrial revolution actually means and what it means in particular to Standard Bank and your strategies across the continent?
Sure. I mean, the fourth industrial revolution means disruption. You know, we've seen disruption across industries, across sectors, and as these industries disrupt, there's also convergence of technology. But it also gives an opportunity to find innovative solutions, you know, for clients' problems, the challenges they face when they're doing business. It's an opportunity for us to also provide services at a lower cost. It's an opportunity to create more value for the client. And what we have done at Standard Bank is really to see how we can collaborate with, you know, fintechs, with telcos, who are also competitors in a way. But it's about really trying to deliver the right solution to your clients. And to do that, sometimes you need to collaborate.
Can you say a little bit more about the collaborations with fintechs and telcos?
Oh, yes. I think I'll first start by talking about the fact that Standard Bank has partnered with both AWS and Microsoft in terms of cloud computing to enable us benefit from digital infrastructure. Okay. And that is enabling us to then work with the fintechs in a much more agile manner.
Oh, that's great.
To deliver services. So I'd give two examples. The first is we've partnered with Founders Factory Africa in the fintech space. We have done investments in 5 fintechs across Ghana, Nigeria, Kenya, and Uganda in the educational space in terms of trade solutions. We've also partnered with a company, a fintech called Nomanini. And what this company does is it has a platform that is able to serve small traders in the informal sector. Okay. They don't have shops, they're just tiny little outlets who would like to grow the informal trade. You know, and what the platform allows them to do is, without leaving their outlets, without leaving where they are, you know, to borrow, to save, they can stock up, and all through the mobile phone. So this is a combination of consumer finance, mobile payments, and retail. You know, retail trade. So it's really exciting. It's an opportunity to really drive economic activity on the continent.
That is exciting. One doesn't think of Standard Bank as being involved in these sorts of entrepreneurial activities.
We've got to reinvent ourselves, and we are. We are transforming the way we do business so we can better serve our clients.
Well, that leads into my next question for you, which is that this year's WEF theme is around financial inclusion. Can you talk to us a little bit about how Standard Bank thinks about the concept of financial inclusion?
We think it's very important. And the example I gave you already about Nomanini is one way that we are bringing small retailers from the informal into the formal. They don't even need to have a bank account with us, you know, but they can access that platform and we can serve them. You know, and they can make payments on that platform. Also, the more we are able to provide financing to the larger corporates across their value chain, providing solutions in the entire ecosystem. And this is in agriculture, this is even in energy. You are able to get more and more small business people, into that value chain and then serve them, because it's much easier to serve the smaller players if they are part of a larger ecosystem. And we just continue to see, how can we take advantage of some of the opportunities that are playing out on the continent. We have a foreign exchange app that was developed by a fintech we partnered with called Shift. It allows traders to buy foreign exchange, on an app in a seamless manner. They can load the wallet, then exchange it into another currency. And all of this helps to bring them into the formal sector. So those are some of the ways by which we are driving financial inclusion.
That's a lot of reinvention. Well, Sola, you have a very unique perspective. You oversee, is it 19 countries, 19 markets outside of South Africa, across the continent, east, west, southern. And so this gives you a really unique perspective to be able to see how the African economy is doing. We understand there are many different trends in different regions, but can you talk to us about what you're seeing trend-wise from an economic standpoint across the continent, particularly in some of the more significant markets such as Nigeria, Kenya, Ethiopia?
Sure. I mean, when you look at the whole of sub-Saharan Africa, GDP growth rates are estimated to be about 3.5% in the medium term. But this masks significant regional variations. East Africa is doing particularly well, and that is because you have countries like Kenya with diversified economies. They're not reliant on sort of one commodity. They're growing at sort of 5.5%. Their economic, macroeconomic environment is much more market friendly, and business confidence is greater. Uganda as well is doing very well. Tanzania is growing at above 6%, and Tanzania can be a difficult business environment. Ethiopia, that is just beginning to open up, is growing at close to 8%. So can you imagine what would happen when it actually does open up its economy? In West Africa, Ghana is doing extremely well. It's also very business friendly. The larger economies, Nigeria has had its challenges because you still have the headwinds of the reliance on oil. So as oil prices soften a bit, that has an immediate impact in terms of foreign exchange reserves availability. Côte d'Ivoire, where we have a presence now, is doing very well as well. And when you come down south, countries like Mozambique have had a pretty slow start to the year. But the good news is that as the developments in the gas area are progressing, the FID has been signed, $20 billion in terms of investment flows, huge number, as the largest to date in Africa, in sub-Saharan Africa. We're expecting that things should pick up there. Angola liquidity issues, FX, because they are trying to diversify their economy. And Zambia has also had its challenges, primarily driven by debt, unsustainable debt. But it's a mixed bag, and the beauty of our portfolio is that it balances out. So East is doing well, some parts of West, and when you put everything together, we still have the right outcome.
Well, there's a view that as goes Nigeria, so goes the continent. As a Nigerian, would you agree with that view?
No.
Okay.
The reality is our presence in 19 countries does give us the balance and diversifies the risks that we face on the continent, which then helps us to build a much more sustainable revenue growth line. But I mean, Nigeria cannot be ignored. It's the largest investment Standard Bank has outside of South Africa. But like I said, we're seeing resilience coming out of our East African portfolio, out of Ghana. So it all adds up to the right number. Yeah.
Let's talk about foreign direct investment. Standard Bank's very involved in facilitating foreign direct investment across the continent. Can you talk a little bit about where you see investment, what countries are doing their best in attracting investment, and what countries are the biggest investors that you see trend-wise at the moment?
Like I mentioned, Mozambique, $20 billion is the largest investment to date in sub-Saharan Africa, and more is expected because this was the Anadaco FID, and ExxonMobil hopefully signs the FID. You're going to get more dollars coming through. And just to give you a sense of the scale, the GDP of Mozambique is about $14 billion. So you're really talking about a transformation of the entire economy. So we can't lose sight of that.
That's a helpful perspective.
But we are seeing investment flows coming into Ghana, Ethiopia. We were financial advisor to Ember, which is a technological platform that connects mobile banking, to telcos. So it's a technology platform. We were able to raise just under $10 million, from European investors into Ethiopia. And even in South Africa, which is still part of the African continent, where in the renewable energy space, you've seen over 200 billion rand, come in, over the past 8-9 years.
Well, that's interesting, very interesting. And the countries, what do you see? China, US, Europe, where's the big money coming from?
It's coming from the US, as in the gas, investments, Europe, and China obviously continues to be a big investor and big trading partner with Africa.
One of the tenets of FDI investing is that the foreigner should always have a good local partner. Are you seeing local partnerships established for the sorts of deals that you're talking about?
Definitely. It's very difficult to operate in Africa without having very good, competent local partners, even for Standard Bank. In all the markets, in most of the markets where we operate, we have minorities, we've got very strong, competent leaders who run our businesses. So it does help to ensure that you have local partners who are aligned with you in terms of values and who are able to understand the local nuances in those markets and basically help you avoid pitfalls.
One of the opportunities, it always seems, is for Africa to have greater intra-African trade. That seems to be something that just isn't enough of. What is Standard Bank doing in that realm to facilitate greater intra-African trade?
We believe that trade is one of the economic drivers, for growth on the continent. A lot of trade takes place informally. So you've got traders crossing borders every day, and the real challenge is to bring down barriers and take those informal trade flows into the formal sector. So the ratification of the African Continental Free Trade Agreement is obviously going to be very instrumental in achieving that goal. It's still the beginning of the journey. The expectation is that it'll actually take off July 2020, just under a year. But even so, the fact that the governments have come together, there appears to be the political will to drive this, And ultimately, if they do achieve the goal of reducing tariffs in a phased manner, 90% of tariffs across the continent, what you have in effect is a market of 1.2 billion people, a combined GDP of $3.4 trillion, with an ability to trade with each other. And there are serious obstacles to be faced: infrastructure, a payment platform, but there is a determination to address those. And I do think what we will see in the years to come is an increase in intra-Africa trade, and Standard Bank is very well positioned to facilitate and enable those trade flows.
Good. Well, you certainly are with the footprint that you have.
Yes.
And your leadership. So we're here, as we said, at the World Economic Forum, having macro discussions among public sector, private sector, civil society. When you think about Africa's growth over the next 3 to 5 years, from the very privileged vantage point where you sit, where you can see so much, what do you think are some of the macro themes, some of the macro priorities that should play a key role in driving economic growth for the next few years? We've talked about some of them already. I know the free trade agreement is a key one. But what other things should government and private sector or civil society be thinking about in order for Africa to help achieve its real potential in the next few years?
So I think infrastructure, both physical infrastructure and digital infrastructure, so the soft and hard infrastructure, are critical enablers to drive growth. Mm-hmm. And we've seen where economies actually invest in infrastructure, that there's an exponential impact on economic activity and growth. So it's so critical. The challenge, obviously, is that the governments don't have sufficient resources to provide the infrastructure, and therefore focus has to be on creating the enabling environment and having the right policies that attract capital to fund the infrastructure. And Standard Bank, plays a significant role in helping to educate investors, and more importantly, enable capital flows from Europe, from the US, from China, Asia, into Africa. So infrastructure is very important. Digital infrastructure as well, with AWS and Microsoft now investing and expanding in cloud technology. What that does is to enable e-commerce. It enables financial inclusion. You can deliver financial services at a lower cost, and I believe that would help, especially the young people on this continent, to set up businesses, to run businesses in a much more efficient manner. I think entrepreneurship is critical. Most of Africa is made up of small, medium enterprises, traders, people in the agri sector, all trying to make a living. And being able to build the capabilities of these entrepreneurs, these SMEs, to support them, to give them access to financing, women especially who are in this space, I think is one of the key drivers for growth in Africa. And the entrepreneurs span the agri sector, all sectors. So that's, and trade is the third I would have mentioned, which I've already mentioned, just enabling trade on the continent, intra-Africa trade in particular, would help drive growth.
Well, excellent. Well, thank you for sharing your perspective with us. This is Sola David-Borha, Chief Executive, Africa's Region Standard Bank, here at the World Economic Forum Africa in Cape Town. Thank you.